If you're self-employed, you write off a lot of expenses on your taxes. And every time you think about buying a home, you get the pit in your stomach because you just know a lender is going to look at your tax returns and say, sorry, you don't make enough money. And so this is for you. There are real programs out there that let you buy a home using your bank statements instead of your tax returns. And they were literally built for people like you. So what I want you to do is walk you through how to do those bank statement and alternative document programs and how they actually work. What lenders are really looking for in your accounts and the biggest mistakes employed buyers make in places like Austin where they get declined when they actually could have qualified. And by the end, you're going to know whether this is worth exploring for you and exactly what to do if it is. I'm Paul Dolan with Dolan Mortgage Group. I have helped hundreds of self-employed borrowers get into homes without using tax returns to prove income. And a lot of them came in convinced there was no way they'd ever qualify. So if that's you, you're in the right place. Let's start with the big idea. You do not have to build your whole life around your tax returns to buy a home. With bank statement loans, instead of taking your adjusted gross income from your tax returns, we look at the actual cash coming into your accounts over a set period of time, usually the last 12 to 24 months. Picture your main business checking account or even your main personal checking account where your business income lands. We pull those statements, we stack them, and we look at the deposits month by month. From there, we calculate an average monthly income based upon those deposits. If you're using a business account, we'll then apply what's called an expense factor to your account to account for the business costs. If you're using a personal account, that mainly shows money that you pay yourself. That factor may be zero or much lower than your business account. The key is this. Instead of using your tax returns, we can use that punish you for your legal write-offs. We're looking at the real money flowing through your business and your life. Now that's where people get tripped up. The number one issue I see is messy bank statements. And for example, let's say you have one account where your client payments hit and another account where you move your money to pay yourself, and then a personal account where you move your money again to cover your bills. And on top of that, you've got random Zelle and Venmo transfers with no clear description, maybe some big cash deposits from time to time. See, when an underwriter looks at that, they're not just asking how much came in, they're asking what's the real income? What's your moving in and out and around? And we have the document. So if they see the big $7,000 transfer from your savings into your checking, that's not income. If they see a cash deposit for $4,000 that doesn't tie to an invoice or contract, they're going to stop and ask for a paper trail of where that money came from. And this is why we structure a bank statement loan. One of the things we do first is pick the cleanest account and the cleanest time frame, and we walk you through the usual deposits before the file ever goes to underwriting. And the second big concept is choosing the right type of alternative bank statement program. You see, bank statement loans are the most common for self-employed buyers in your situation, but they are a larger part of a larger group called non-traditional or portfolio loans. Some of those programs will use bank statements and some will use personal. Some might allow CPA prepared profit and loss statement. And there are even asset-based options where if you have significant savings or investment balances, the lender will use that and turn those into what we call qualifying income. So imagine three different self-employed borrowers. One is a consultant with very consistent clients, paying payments hitting the same business checking account every month. For them, a business bank statement program using those deposits might be perfect. Another who is, let's say, a real estate agent who pays themselves regularly into a personal checking account. Now, in that case, a personal bank statement loan might tell a clearer story. And a third person has a less predictable deposits, but a strong investment account. And in that case, an asset-based option might make more sense. See, the mistake is assuming that there's just one bank statement self-employed loan and everyone gets shoved into the same lane. The third piece you need to understand is that these programs come with some trade-offs. Because the lender is taking on more risk by not leaning on tax returns, they're going to be more focused on the overall strength of the file. That means they'll care about your credit profile even more, your debts compared to your income, and how much of your own money you're bringing in. We're also going to look closely for risk signals in your banking history, like frequent overdrafts, bounce payments, or a big drop in deposits over the last few months. A very real example, if you've had, let's say, an amazing year last year, but over the last 6 months, your deposits have been cut in half. A bank statement program used in the last 12 months might not help you as much as you think because your average is going down to be pulled by that recent slowdown. On the flip side, if your income has been trending up and your last 12 months are stronger than the year before, a bank statement approach may actually show a better picture than your last filed tax return. So timing matters, and that's something we can game plan together. So fourth, we have to talk about documentation. Going this route does not mean no paperwork. You're going to be asked for a set of bank statements, usually all of the pages, yes, including that blank one at the back, for each month. And we'll often need a letter from your CPA or your business license, sometimes a short written explanation for larger or most likely unusual deposits. Now, if you own multiple businesses, we need to be very clear as to which income we're actually counting. For example, if you have an LLC that puts that owns rental plus side gig plus your main company, we don't just throw everything into a blender. We carefully choose which streams we're using to qualify, and we make sure that it's supported by the accounts we submit. Now, when you're trying to do this yourself, it's easy to send a random mix of accounts that tells a confusing story and ends up in your loan getting declined. When you do it yourself, when we do it with you, we reverse engineer it. We start at the target, what your price range is that you're looking at, what kind of payment you feel comfortable with in your life, not just a formula. And then we work backwards into how much income we need to show and which program and set of bank statements will best support that. Now, all of this can feel like a lot. And honestly, trying to piece it all together alone from a YouTube video and blogs is where a lot of people spin out. So I put together a free guide that lays this out for you step by step, specifically for self-employed borrowers who want to qualify using bank statements instead of your tax returns. So it walks you through how lenders read your statements, what to clean up before you apply, and how to choose the right account and timeline so you're not guessing. Calculating this and mapping it out on your own is an absolute headache. And the guide is meant to take that guesswork off your plate. It's linked right down here in the description if you're watching this and thinking, okay, this might finally be my way in. Your next move is simple. Grab the guide in the description, go through the checklist, and then book a quick strategy call with me at Dolan Mortgage Group so we can look at your actual situation, your actual bank statements, and build a strategic plan that fits you. Don't let write-offs or a confusing stack of accounts keep you stuck renting if you don't have to. Click on the link in the description to grab the guide or just schedule a call with me and my team and we'll walk you through your options. And if you found this video helpful, feel free to subscribe to my channel and we'll see you next time.